The Schwab US Dividend Equity ETF, or ticker symbol SCHD, versus the popular and powerful iShares Core Dividend Growth ETF, ticker symbol DGRO. Which ETF is better to invest into as a long-term dividend growth investor, and which ETF is going to give a bigger return with $50,000 invested into each? Well, I have the answer to all this, so make sure to stick around to find out. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, SCHD, in case you're not familiar with this ETF, the ETF has a very simple objective. It says it right here on the website. The fund's goal is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. Now, one of the main reasons I like SCHD is because if you dig a little bit deeper into this ETF, which check out other videos on my channel, I dig very deep into SCHD because this is my favorite long-term dividend growth investment. But if you dig deep into the Dow Jones US Dividend 100 Index, look at the methodology, understand how this index works, you are going to see exactly how powerful this ETF is. But SCHD does have some competition because DGRO is also extremely popular, extremely large, and offers similar attributes on top of that. It says right here on the iShares website, DGRO offers low-cost exposure to US stocks focused on dividend growth. Now, unless this is the first video you've ever seen of mine, you know that one of my favorite metrics of all time across everything in the stock market is dividend growth, because who doesn't love getting paid more and more in cash flow year after year? DGRO also has access to companies that have a history of sustained dividend growth and that are broadly diversified across industries, which I also like. Use as a core of your portfolio to seek income. Now, it really does feel like, for the most part, in the dividend growth investing community, it's sort of split on whether or not people are interested in investing heavily into DGRO. And like I said, I might be sort of biased because I'm a huge fan of SCHD, which I'll share with you guys exactly why in a second. Now, another thing that's going to be very important, especially if we are comparing both of these dividend growth ETFs, is of course their holding breakdown, because it's safe to say that if you hold on to any ETF, you need to know exactly what's within it. So SCHD's holding breakdown as far as sectors: financials are the largest, healthcare is the second largest, then consumer defensive, industrials, energy, consumer cyclical, then we have technology, communication, basic material, and utilities. For DGRO, it is similar, although one thing sticks out to me: financials, healthcare, and then technology. There's about double the technology in DGRO compared to SCHD, which I, as a younger investor, definitely see that as a plus, because technology does have the potential to grow a little bit quicker, at least historically it has. Then we have industrials, consumer defensive, energy, utilities, consumer cyclical, basic material, and communication. So all in all, if you want to compare both these just on holding breakdown sector-wise, I personally would say that DGRO wins, but again, let's keep looking. This is also a super important aspect, looking at the top 10 holdings for each ETF. Now, side note, DGRO has about 4 times the amount of holdings of that as SCHD. SCHD has around 100, DGRO has about 400. But the top holdings for SCHD, we have Texas Instrument, Lockheed Martin, we have PepsiCo, Chevron, Coca-Cola, Pfizer, Amgen, UPS, Verizon, and Cisco. All dividend growth style companies. Some of these names in here definitely grow their dividends quickly, and I know that because I hold some of them on a single hand basis. But so far so good. I wouldn't say these are necessarily my favorite companies across the entire market, but honestly not complaining. Now, DGRO's top 10 companies: Exxon, Chevron, Microsoft, JP Morgan, we have Apple, Johnson & Johnson, AbbVie, Procter & Gamble, Broadcom, and Merck. Now, honestly, you'd probably call me crazy if I were to say that SCHD's top 10 holdings are better than that of DGRO. Let's be real here. Apple, Microsoft, even having a large portion of JP Morgan, honestly, that's sort of hard to surpass. So I would say, just on a holding basis, if we were to compare DGRO to SCHD, I would give this one a DGRO. Now, another important comparison: expense ratio. This is pretty simple. SCHD's expense ratio is 0.06. DGRO's is 0.08. So although DGRO is more expensive to hold on to, we're talking about 0.02% more expensive. I don't think any of us are going to notice that too much unless we own thousands of shares, which I hope we all do in the future. But now here's where things get a little bit more interesting. SCHD's trailing 12-month dividend yield, 3.46%, DGRO's 2.37%. So by buying a single share of SCHD over DGRO, you are getting exposed to almost an entire percentage more yield. So for those income-focused, dividend-focused investors that are sort of maybe in a rush for more dividends, maybe they want to retire earlier, maybe SCHD could be a better option here because, of course, initially it does offer a larger yield. But now as far as dividend growth goes, over the last 5 years, that's all we have because DGRO has not been around that long. 5-year dividend growth rate, 9.7% for DGRO. And honestly, very healthy, very consistent dividend growth for DGRO. That's one of the main reasons this ETF is so popular. And of course, we looked at the objective of this ETF and it said it right in there. Now, SCHD has been around a little bit longer. We have almost an 11% dividend growth rate for 10-year and 11.8% on the 5-year. So even though DGRO did win the holdings, I would say SCHD wins as far as dividends go and dividend growth, although of course these are both amazing options. But most importantly, without wasting another second of time, let's see exactly how SCHD versus DGRO performed during the same exact time frame with $10,000 invested into each one of these ETFs. So first off, this is over a 9.9-year time frame for both these. SCHD's total return over this time frame, 179.32%, or annually we have 10.94% on average. Now DGRO, the same exact time frame, 184%. Or per year 11.14%, making DGRO the winner at least over this time frame of 9.9 years, although basically these ETFs are neck and neck, which is why I think honestly either one of these ETFs are an amazing option, especially for long-term investors looking to hold onto an ETF and build out a foundation, especially in the early days. So because DGRO does have a larger total return over that time frame, we have to give the winner to DGRO. But to be fair, I do think that SCHD, for more dividend income focused investors that want a little bit higher yield off top, that want to get more dividends in the portfolio a little bit quicker, DGRO is definitely also going to do that, but SCHD might do it a little bit faster. Now, I also do think it's important to say that the holding list is something very, very important. And the fact that DGRO does have so much exposure to things like Apple, Microsoft, technology exposure, that is most likely, at least in my opinion, going to give this ETF much more growth potential. That is also something important to keep in mind if, again, you consider yourself more of a growth investor. But honestly, like we saw, either way, whether you buy into DGRO or SCHD, over time, at least historically speaking, you're going to do just fine, especially because the fact that both these ETFs are very diversified, hold on to some of the best companies in the world, and of course have performance of paying dividends over time and paying more and more in dividends as the years have went on. And like I said, for me specifically, as of right now, at least, I'm currently building out a position of SCHD. But once I build my SCHD position to a certain point, I am going to be looking for a new dividend growth style ETF to build out. So maybe it'll be DGRO or maybe something else. But lastly, now I want to hear from you guys down below. In the battle of SCHD versus DGRO, which team are you on specifically? Drop the ticker symbol of what you think is better in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.